All right, hey everyone. Mark here, Mark Pre-Markets. Thanks for joining me for another Greenbridge Investing market analysis. Probably gonna have a small crowd here today. Hold on, let me adjust my microphone. I notice when markets get bearish, people lose interest very quickly. Okay, if you look at my numbers on the articles that I put out on TradingView, you can see like a relationship there. Anyway, thank you for joining me. So, of course, in this session, we're going to be looking at Bitcoin primarily. All right, that's the analysis I'm going to show you here. We're going to talk about some scenarios for the following week and how you should prepare, how you should anticipate. And then, of course, I will be going over your questions. So if you have an altcoin or you have a stock you'd like to see, as some people are doing here, please put your question in the text channel now. And then when I get to the questions, I'll be able to answer your question. Please put one symbol per person. I mean, again, if it's a small crowd, then I should be able to answer everyone's questions. All right, so again, do that. Also, if it's an altcoin, make sure to put USD or USDT after the symbol so I get it correct. The other thing is, if you'd like to share what country or what city you're from, that's always a fun fact. All right, I'm streaming from the greater New York City area, also known as Northern New Jersey, and why I talk funny. All right, so people, let's get this thing started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, I just want to mention our student chat room. I'm very happy with the charts. I set up like a special chart channel just for the charts, and people are producing charts. The students that went through my program. It's really nice to see. This is a great way to spot potential opportunities. I mean, there are a couple of charts in there from markets that I don't pay attention to some of these markets. I never heard of them, right? And we got guys that are following these things, and they're putting the charts in the channel and evaluating them, right? So it's really a great resource for students, and I'm looking to get more students in there. Now, there's been a couple of questions about the chat room. People have been asking me, how can they get in the chat room? If you have to take the training program, okay? That's how you get into the chat room. Not only do you have to take the training program, but you have to get your certificate of completion, okay? Which basically proves that you've successfully completed all the assignments, okay, based on my standards. On top of that, you have to be able to demonstrate that you can follow instructions. And then when I see those things, then I invite you to the chat room. The chat room doesn't cost anything, okay? The private student chat room, because basically it's sort of like a bonus for the training program, and it allows students to share notes and all that other stuff and evaluate things together. It's not a place for me to handhold. It's a place for students to develop on their own, okay? So anyway, I just wanted to mention, I really like what's going on in there. And the other thing is people that don't want to really be active, like, and participate, because to be in the room you have to contribute. If you don't want to contribute, then I'm going to set up something for that where you can pay, and that'll be your contribution. But people that contribute are not going to pay. So I don't have that set up yet. I'm not going to have that set up anytime soon, but I'm just telling you that's where it's going. So right now, people that don't contribute are going to be kicked out. I have a couple of people on the list that are going to be kicked out because I haven't seen anything. All right, anyway, so let's get this thing going here. Let me say hello to a few people. I see Schwartz in the chat. That's good. That means I can continue the stream without any interruptions or cancellations. Hello, Schwartz, my international man of mystery. Busy guy, really busy guy right now. In this time that we're going through. International men of mystery are usually very busy. All right, anyway, Steen, good to see you. We got Dan, Mr. Plow. All right, cool. Kai, good to see you. Half of these people are students. Eligius, HS, good to see you. Winterfresh, I got my Romanians in here. Got to make sure I always have my Romanians. We got Chris. All right, cool. And good to see you, everyone. Peter, hey, good to see you all. Okay, so today is Monday. Let's first take a look at the economic calendar. Now, I want you all to keep in mind, it's very important to understand this environment, okay? This is a very unusual environment. It's very important to understand what that means. It's an exception. So there are going to be lots of imbalances. We usually don't have this type of geopolitical situation taking place, okay? So the markets are going to react to all these little pieces of news. There's no logic to any of this. Charts are not going to be they're not going to help you spot some of these moves coming. Okay, a move can just come out of nowhere just because some kind of news takes place and people react, okay? It does not pay to be a reactive trader. So in this type of environment, it's better to just stay out or just avoid trades altogether or be extremely selective. We're going to talk about that with Bitcoin and stuff like that, okay? Anyway, just wanted to give you that as sort of a context. So quickly, economic calendar. I like to look at this. This is especially important for Forex pairs. As you can see, there are going to be imbalances. Like I said, Forex is all over the place. We'll take a look at the US dollar here in a moment. But all right, let's begin with the calendar, get this out of the way. So we have on the 8th, which is tomorrow, we have Europe, gross domestic product, okay? That's really not going to be a market mover. We also have Australia, Governor Lowe's speech. Those usually don't do anything unless it's Powell. Even Powell had a couple of days of testimony over the previous week, and what he said wasn't anything special. On the 8th, we also have for Japan, GDP, not a big market mover. Now, we have China Consumer Price Index year over year. I wouldn't worry about that too much. On the 10th, we have the monetary policy decision statement for the ECB and their interest rate decision. So when is that? That's, what is that? Is that Wednesday? Tomorrow is the 8th, Wednesday's, no, that's Thursday. Thursday's the 10th. So ECB comes out with their rate decision. That can certainly affect the euro and the pound or things that are across the euro. So again, something to keep an eye on, but it's usually not a global mover. Now, also on the 10th, we have Consumer Price Index, CPI. Now, because inflation right now is an issue again, we can see with gold, we can see with oil, right? And again, these are being pressured by geopolitical variables and all these imbalances. We can see metals, other metals going nuts. We can see other, like what do they call it? Like wheat and those type of things going nuts. Again, it's all geopolitical. So these are not trends. This is this exceptional pressure that came out of nowhere. So this number can have an effect on things because this number is basically one of the variables that the Fed uses to gauge how they're going to adjust. What's the Fed going to do in this environment? I mean, the Fed is supposed to guard against inflation. The Fed has recently overstimulated a market, and now we have this situation where, I mean, hyperinflation can result. It's possible if these prices keep going. I mean, it's amazing how gas, where I'm located, gas, to put in your car is usually not dramatically affected by stuff because I guess we have refineries here. But man, gas has jumped like about like $1 in like a day or two, and that's very unusual for this area. Anyway, so let me see what else we got here. So that's going to be an important number, right? So keep that on your list for Thursday. Also on the 10th, we have RBA. We have the Royal Bank of Australia, Governor Lowe speech again. Okay, no one cares. We heard enough of that guy. On Friday, we have Germany, Harmonized Index and Consumer Prices. And then we have net change in employment for Canada and their unemployment rate. So those numbers aren't important. And then we have the Michigan Consumer Sentiment Index. That's not important either. So the main one really this week is CPI. All right. So make sure you have that, just on your radar. That's going to be particularly important for certain stocks or, Forex pairs, things like that. Not really a Bitcoin mover, but just something to keep in mind. All right. Anyway, so let's get to Bitcoin now. I see all your great questions in here, everyone. Thank you for sharing them. Again, I will get to your chat once I get through this Bitcoin chart. Hey, Sean, good to see you. All right, we got Thomas Travel. Hey, good to see you. All right, Travel, I'm sure you're happy, Travel, but he's not saying anything because every time he says he's happy or sad, I get on his case. All right, I'm joking. All right, so let's take a look at Bitcoin. Time for my Seinfeld impression. All right. So, and by the way, I'm going to be putting more resources into that student chat. It's still a work in progress. I want people to keep in mind it's a lot of work, and I've been absent from the Greenbridge chat because I've had so many other things that I have to take care of in the background here because I'm moving Greenbridge over to the same server, and it's been a lot of work. Okay, so Greenbridge people, be excited because we're going to change your experience completely, and it's going to allow us to share a lot more signals a lot quicker than usual, right? So more is not necessarily better, but it'll be more efficient, and that will really make for a better experience. Plus, type of resources that I could put into this server are so much better than what we have now. All right, anyway, so let's begin here with Bitcoin. All right, don't be happy, travel. Don't be happy. Don't be emotional. All right, so here's the thing. First things first. Let's talk about just the general trend situation, right? So we talked about the bearish structure, right, recently, right? So we can say at this point, going back, what is this going back to here? November, right? That's basically it peaked in November. So from November until now, that's basically, we can consider that our midterm trend, as my students know, and that is bearish, right? Lower highs, lower lows, and I'm not talking just because of this lower low here. Here, let me get my little rectangle tool here. I'm not talking about just this here. I'm also talking about this here, right? This lower high right here. Now, this was established over the previous couple of weeks. In fact, Dan had a question about this double top situation. And yes, I would consider this a double top because double tops typically need to be close. They need to be near in proximity, at least within a month. You know, and this is like 20 days apart, he pointed out. Yes, that would be a double top. Now, the thing is, you know, we're looking at this after the fact. Okay, great, double top, all this and all that. There was actually a selling opportunity there. Just to be fair here, I pointed out 2 trade ideas recently, right, in the chat. A long over here, which got stopped out by this wide range pin bar, and then I mentioned a short position. Okay, this was like a week ago. I had no intention of taking the short position, but in the chat I mentioned that it was for training purposes. Okay, and I made that very clear, as people can tell you. And that short was sort of on its way, right? And then we got this, right? Because this is when the ruble fell apart and, you know, the Russians were buying Bitcoin. So again, random piece of information. That trade, if it was taken, would have been stopped out. Now I see someone here in the chat, Mr. Plow, you got short from 43K. This location up here, that is a place, if you were going to short, that was the place to do it. I mean, there was plenty of evidence that there was resistance there. That's what these horizontal lines represent. In fact, I had a question from Dan around that time asking, would it be a good idea to put maybe a breakout order, you know, a long on a breakout? And I said, you know, not in that location, because, you know, even though it could have possibly broken out somewhat, it's in a resistance. Not only is it in a resistance, but it's in a resistance in a midterm bearish trend. Do you see how that context play is a factor now? So here's the thing with this. We're going back to this support area, 35K, right? And this is one of the scenarios I wrote in my TradingView article, right? People they can criticize my TradingView article and say, oh, basically he's just, you know, covering every scenario. Well, that's the way the market is. We have to prepare for a scenario. We can't predict. Anyone that predicts anything is fooling you and fooling themselves, okay? Because there's no way to know, and no one knows anything. So if you're prepared for scenarios and the scenario confirms, now you have an idea of what is likely to happen next, and you can assign a risk to it. And that's all we can do, okay? I've been doing a lot of research on gambling and the contrast between game of chance and game of skill, because I'm actually going to be producing some videos on that stuff, because these are very important concepts that you need to understand. If you're going to get anywhere in market timing, you need to understand how markets work, the nature of a market. And if you don't understand that, you're just wasting your time, okay? Everyone wants to, they're in this for the money. I need to make money. I'm going to make money. I'm going to press a button. I'm going to make money. But those are all the wrong reasons to be in this game. Okay, this game is actually a game of risk, and good risk management will lead to, or more likely lead to, an excess return. That's, of course, we're all after that, but you cannot focus on that. Okay, that's what everyone wants to hear. That's why all these fake gurus do well. Okay, I'm not going to get into a fake guru rant right now, but the whole point is, you have to be in this thing for the right reasons, and you have to understand the foundational concepts of what move prices. Right? I put a trick question in my TradingView article. I said, what makes a market move higher or lower? Now, if people, oh, I'm going to tell you my logical answer about that, you know, the news and plus the economic blah, 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 blah. Okay, that's a trick question. It doesn't matter why the market moves higher or lower. People always search for why. If you're searching for why, you're wrong right from the start. okay? It's where that matters, where. So let's talk about that right here. All right, so we know the 43 to 45K area is a resistance, and it's a bad place to buy. Anyone that bought there that got sucked into any type of hype from your fake gurus, the fake guru crew, we'll call them. All right, I'm not going to mention any names, but anyone that bought into this is now stuck. All right, this is the location, 35K, to be looking for longs if you're going to consider a long. Now, here's the thing, though. What is the risk? And I see a question here in the chat, like, what are we going to break 35K? Again, there's no way to know. But what I can tell you is the structure favors a break of 35K simply because lower highs often lead to lower lows. That's a lower high, all right? This resistance area is generally, it's respected. It tried to break a little bit here and it failed 3 times. Not only that, but it gave back this nonsense move right there, okay? We'll call that the ruble move because the entire country of Russia is going to put all their money into Bitcoin. Nonsense, okay? Nonsense. Gave it back just as quickly. That is not a good sign, people. That is not a good sign because a market that has any type of strength doesn't do that. So this thing, I suspect, we're not going to hold 35K based on this structure. Okay, again, I could be wrong. I don't pretend to know what the market is going to do. All I can do is prepare for potential scenarios and assign risk. So we have a potential buy area right there. In this type of situation, wait for 35K. Not 36.5, not 37, 35K. Wait for it because it's likely to be touched. We have a lot of pressure on this thing. Understand, interest rates and the dollar. We're going to take a look at that nutty dollar chart in a second. It looks like Luna, okay? Or when Luna was going berserk. The dollar looks like an altcoin, and that type of pressure is not good for anything anti-inflationary. So the Bitcoin party, people, I hate to burst your little rich bubble, but the Bitcoin party is over, all right? And what I mean by that is there's not going to be any type of dramatic, spectacular rally anytime soon. We're more likely in this environment. Understand the context of the environment. I'm not being pessimistic because I'm a bear and blah, blah, blah. I just go by what the charts tell me, and I consider what the charts tell me in the context of what's going on in the bigger picture and paying attention to major variables, not the garbage they feed you in the news. But you have to understand interest rates rule the world. Interest rates, everything revolves around interest rates. We are going into an unfriendly interest rate environment. The reason why we had that ridiculous rally that we had over the previous 2 years, and everyone, it turned into, people buying NFTs, worthless graphics for $20,000. The reason why we had those ridiculous situations is not because people lose their minds. It's because the Fed was pouring money into the market, and people, when there's all this extra money, people gamble, right? That's just nature. That's where speculative bubbles come from. And there's been a number of instances of this throughout recent history anyway, of these bubbles as a result of Fed action, right? The Fed is not behind this anymore. So speculative assets like Bitcoin and altcoins, the party is over, especially altcoins. I was looking at some altcoin charts. They're lower more than 50% from their highs. We're talking like the November, December highs, when all these morons on YouTube were saying early investors are going to make billions of dollars, billions. Let me tell you, the only people making money in this are the fake gurus and the altcoin developers. If you want to make money in altcoins, become a fake guru. It's the easiest thing to do. Anyone can become one. All you have to do is put some fancy charts, build a following, and push altcoins, right? The altcoin marketing people will come to you and pay you $20,000 to push their altcoin. That is how you make money in altcoins. Otherwise, you're not making money. All you're doing is donating to those that are doing what I just said. So anyway, back to Bitcoin and stop ranting, okay? No more rants for now. 35K is likely to break based on this formation. If 35K breaks, we're looking at 30K, all right? That's what we're looking at. That's the next level. Let these things do their job. Don't get in the way. And don't use logic in this market. Do not use logic. The first thing people cling to, because of this situation right here, it should be this, it should be that. there are imbalances, and we don't know all the variables. So you can't assume anything, right? I anticipate that we're likely to break and push to 30K because of these environmental variables and because of this formation. Now, it's possible that we get the reversal at 35K. That will offer a swing trade opportunity, okay? It's aggressive. It's certainly going to be aggressive, and I wouldn't have great expectations of it. But that would be a potential opportunity if you're into the long side. As far as shorting this break, it's extremely risky. Why? You're like, well, you're saying it's bearish, so why is it risky to short? Because the reversal, you can get a massive reversal out of nowhere, just like we had previously here. And that is enough to squeeze you out, especially if you take a position that's too big. This can easily squeeze you out, especially with all the hype and all the nonsense that comes along with it. So shorting this breakout, it's extremely risky, right? When you're looking to short, again, I don't short Bitcoin. I'm just talking about it for people that are interested in that. If you're going to short anything, whether it's the S&P, Bitcoin, whatever, you're best do it at a resistance level, not support breaks. So anyway, but you're likely to get that breakout. You're going to have a lot of breakout traders, bears, they're going to be, running their mouths and all that other stuff. Please don't pay attention to that nonsense. If we break 35K, 30K is next. All right, that would be the area where I'd be looking for the next reversal or any type of stability. Now, as far as buying inventory in this game, again, if you want to buy inventory and just for the long term, okay, I would focus on Bitcoin or Ethereum. Stay away from these altcoins. They're garbage, most of them, and you're going to see a lot of them just go to nowhere, okay? So if you're going to build positions, do it in at least the most recognizable and the highest quality of all of them, and that's Bitcoin, right, for whatever reason. Now, keep in mind, this thing, it's possible, if we break these supports, it's possible to go back to the 20Ks, all right, it's possible. And with the current environment, I think that there's a decent chance, all right, with rising rates, unless the Fed changes its tune, unless there's some changes along the way that change the nature of this current environment that we're in. Until then, I'm not optimistic at all about this situation here because these are highly speculative assets. Does that make sense? All right, so I'm going to get to your questions here in a moment. Let me just show you a couple of things. All right, so let's start with the dollar index. Look at the dollar index. No, this is not AVAX. No, this is not DOT. No, this is not Luna. This is the US dollar, okay? The US dollar. This is nuts. Now, for those of you that have been following me since August, what have I been saying about the dollar? Especially when we got into here. What have I been saying about the dollar? The dollar is strong. Don't mess with the dollar. The dollar is strong. The dollar's... No, it's not. The dollar is not strong. Look, it broke a support. Oh, look, it failed. Double tap on the dollar. The dollar is weak now. Dollar is not weak. Look at the dollar now. This is nuts, okay? It's like the dollar became an altcoin overnight. So this is a result of the geopolitical situation. You cannot apply logic to this. It is what it is. You have interest rates supporting this. Rising rates are good for the dollar. Okay, it makes the dollar more valuable. Look at this thing. It's berserk. What's the price on this thing right now? 99,168. All right, and it was as high as 99.41. So this is bad for everything else. Now, so this is going to put bit pressure on Bitcoin. It's going to, because this is a powerful move in the dollar. The dollar is still the world reserve currency. So this is going to have a major effect across a lot of things. This is anti-inflationary. Now, let's take a look at the gold real quick. I know we have some questions here on gold. Look at gold. That looks like the dollar, right? That's nuts. Now, again, it doesn't matter why. What's the price of gold right now? 1993, okay, it was as high as 2002. We haven't seen these highs in over a year and a half. As you can see, I have a resistance line up there, blew right through it, okay? Now, this is extremely unusual. Why? When the dollar goes vertical like that, gold should not be doing this. So we have an imbalance here, and this imbalance is not a good thing. Imbalances are not a good thing in the long term because when they have to correct, it's going to be more exaggerated. So what do you do with something like gold? I mean, do you buy this now? If you buy gold right now, because it's completely irrational, you're playing pure momentum. And you have to understand that when you play a pure momentum game, if you buy gold, the moment it turns the wrong way, you have to get out. Because when this thing corrects, it has a long way. I mean, this thing can go back to 1780, blah, 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 right? Those are the range. That would be these resistance lows over here. What is that? What is the high here? 1877. Actually, that would be the midpoint there, okay? So that's a long way for gold at this point. If it reaches the range lows, what is this, 18 and a quarter, 1790s? Those are the range lows. It's hard to believe that we'll go there, but right now, people are going nuts with the gold. You're going to hear all the gold people come out. You know, I told you gold is going to go to 5,000 by next week. I told you, right? You're going to have all those guys coming out. Now's the time to buy gold. Now is not the time to buy gold. If you bought gold previously to this move, this is a great time to take profits in gold. Take some profits at least. Is gold going to continue like this? Not at this rate, and not with the dollar. I've been saying this for a little while, but again, this is being driven by a very specific and unique situation. So I would not put any weight on this. This is not a trend. This is just an extreme reaction. And you have to understand. So what about shorting gold? I would actually be into shorting gold, not at this moment, but I would be into, I like the location for a short, that's for sure. We have this, look at this pin bar attempt here, right, which got completely covered. It got completely taken out. So the thing is, this is a great location for that, all right? You just have to be very, very careful. Also, oil, WTI. You have to pay attention to these things, right? Even if you don't trade them, because these affect everything. Look at oil. Oil is as high as 127. Great. I'm not going to get political right now, but anyway, the point is this. This is ridiculous, okay? Being driven by the geopolitical situation. I had someone in here about a week ago saying that he shorted oil at 95. And I said to him, be careful with that. Be careful, because if it gets out of hand, you're going to need to get out of that thing quickly. I hope he got out. All right, oil I think was at 92 at the time because he had that 95 short, and he was asking me about it. And when you have these unusual situations, I mean, a chart's not going to help you predict this. Okay, it's just not. So understand that these are not good signs in general for a stable market. So any expectations of the party that we've had in the previous 2 years, please wipe those out of your mind. We're going into, if a good scenario would be a consolidation. All right, let me get to your questions now. I just wanted to touch on those other markets because you need to pay attention to them. Whether, you know, maybe you say, well, I don't need to, I just trade Bitcoin. Doesn't matter. You need to understand some of these economic variables because Bitcoin is going to be part of that economic situation. And you need to understand how these variables can affect your chances of the market doing something or not. All right, it helps you weight probabilities, even if they're anecdotal, right? Because again, I can't come up with a specific number. I can't say, oh, there's an 80% chance of this, because I have no way of quantifying that. All right, let me get to your questions. Again, I know I talk a lot, but thank you all for spending this time with me and being patient. So let's get to your questions here. So Steen, I said, hello, can you have a look at Intel? Sure. So INTC, right? Interesting. We talked about Intel. Remember we talked about Intel when it was breaking that support. Intel, let's go to a weekly chart. Intel came off of a pretty significant support level. Look at this weekly support. That was a beautiful level if you were able to step into that, right? Now, Intel is a market stock, and considering where the market is today, being minus only 16 cents is nothing, right? Intel is obviously a leader in its industry. It's a good company. All that stuff. So we don't need to talk about that. But the point is, as far as any trades in Intel, I would not really consider Intel a good choice for swing trades. I think it's a better choice for inventory. And because it's generally a slower mover, you're near this little minor resistance area on Intel. What is this price here? 40, 49, basically the $50 area. It's a whole number. And you have to understand something. If you're going to play something like Intel, I mean, you might as well look at the semiconductor index, and you also might as well look at the NASDAQ, right? Because anything that goes on there is going to affect this thing. This thing had a nice little move in recent days, but I would not be very optimistic on stocks right now in general. These moves are going to be limited. Let's compare this thing. Let's go to the NASDAQ, okay? Anytime you look at a stock, you should always look at this. Look at this. This is not good, okay? Now, that is a very, very ugly candle. What is the price? It's minus 400 and something points today. Now you may say, oh, but this is double bottom developing here. It could be, right? It's certainly a good location for that idea. And if a doubled bottom happens to develop, it's going to be generally good for stocks. But the thing is, for long term, when it comes to stocks, you have to think longer term, and you have these resistances that you're competing with. This is going to affect Intel. All right, that's why I'm bringing it up here. So the thing is Intel, a good choice? Well, if you're dealing with inventory, maybe you get some pops up to some of these resistances, but until a resistance is cleared, this bearish structure is in play, which means Intel is going to feel pain, right? Even though it may look good, there may be moments where Intel looks good. So if you're going to play inventory, have your inventory schedule and be prepared for lower prices, because if this NASDAQ breaks, and there's a lot of reason for it to break, then Intel is not going. Intel, even though it may not get hammered like the other ones, it's not going to do anything spectacular anytime soon. Does that make sense? So keep an eye on the NASDAQ. Keep an eye on the semiconductor index, right? Take a look at the SOX, because that's also, look at this thing. So considering Intel is hardly getting hammered, while the rest of the industry is, that's a sign of relative strength. So Intel is certainly a good idea for accumulating some inventory. It's also, like I said, for a swing trade, there are better choices out there. But just keep that relative strength in mind, because this is not good. This is certainly not a good look for the SOX. I want to point something out. This situation over here, right? People may not remember, but there was so much hype and so much nonsense in the market about buying this and buying that, and these are going to be the stocks of the new year and blah, blah, blah. Do you see why you need to not pay attention to that stuff? Okay, what was I saying at that time? Those that follow me, what was I saying? I was saying stay away from stocks. That was in December. I was saying stay away from stocks. Now, I was not able to predict that this was coming, okay? I had no idea what was going on in the Ukraine and all that other stuff. All I knew was we were going in a rising rate environment. That I knew. I also knew that we were at very risky levels for stocks. All right, this is the semiconductor index, but the NASDAQ and the S&P were saying the same thing. I was saying stay away from stocks. So if you are the type of person that likes good stories and getting sucked into hype, you should seriously quit this game now. I don't mean to be discouraging, but if you're in this to make money, you're not going to make money. All right, you need to focus on the only information that offers any type of value. And there's not much out there that offers any value. We like to think, it's human nature to think that, I read this news article and, I know what I'm talking about with economics and, yeah, it makes sense. We like to think that we're better than we are, overestimation bias. We also like to see things that's not really there, confirmation bias. We're affected by these things all the time. People get this false sense of confidence, especially in a random environment when it rewards you for your flawed thinking, okay? So if you can't get beyond that human nature obstacle, you're not going to have a pleasant time over the next probably year. In a bullish environment, it's easy. Everyone makes money. Just buy the pullbacks and hope. That's all you have to do. There's no skill required in that. Anyone can do it. This type of environment that we're going into, now you need to know what you're doing. As far as risk, a lot of fake gurus are going to be exposed. If not, they're not exposed by now. They're going to be exposed with their lack of experience and lack of knowledge, because they're not going to have any idea how to navigate the coming environment. All right, it's not going to be easy or pleasant. Anyway, all right, enough of that. Let's move on to your questions, man. Let's just spend 3 hours talking about nothing. All right, plow keying. Okay, got you. So we talked about that. Schwartz. So Schwartz, my international man of mystery. You want to buy some Bitcoin? Like I said, inventory is okay. Small bites scheduled over a period of time. There's absolutely no reason to step into this thing big. I wouldn't even skew larger. I've said in previous streams, when you're at lows, skew larger. I wouldn't even skew larger here, because this thing can break 30K. It's possible. All right, it's very possible. I can't give it a specific probability, but I would go as far out and say that there's a 51% chance, okay? I mean, just slightly more than random. I think the structure favors that. All right, Kai. So we have a question here about, so S&P. See, Kai always asks me about the markets that I pay attention to. So we were just talking about the NASDAQ, right? S&P and NASDAQ pretty much do the same thing. Look at this thing, right? Look at this thing. So what you need to pay attention to is lower high, This is what you need to pay attention to, lower high. Let's take a look at a weekly chart. Right, this is the weekly chart. Now, the S&P, as we know, look at this. Oh, there's a bull market. Yeah, bull market over the recent couple of years because of the stimulus. That's what that was, right? We know that. Now, this structure here has been bearish since we've broken some supports. So I would say the midterm trend is now on the bear side. We keep touching some important levels, right? These important support levels, but we're not bouncing. Okay, there was a bounce attempt. This candle today is certainly not helping. So I would be anticipating support breaks and continuation of this bearish momentum. Why? We're no longer in a safe environment. We're no longer in a stimulant environment until the Fed changes their tune. All right, especially with the dollar looking the way like it's looking, this thing is likely to break these supports. Okay, again, which says something about stocks. Over the next near term, I would stay away from stocks. This is really not a good time. I wouldn't be shorting this, but this is not a good time to buy just yet. Okay, wait for stability if anything. We're at a good location, but there are a lot of factors that are pointing to a likely break rather than a likely bounce, right? Even if we get some small bounces here and there. Keep something in mind. When you look at a chart, even if it's a 1-minute chart, you're looking at history. You're looking at what's transacted previously. Even if the candle is still open, it's old, okay? Because a chart is just the matching of orders. And once the order is matched, it's history. Your job is not to look backward. Not you, Kai, but people that are listening. Your job is to look forward, okay? Look here. But you say, well, there's nothing to look at there. Exactly, right? That's the whole idea, is you need to be able to figure out what's likely to happen there. And we can use previous information to help us anticipate what is likely to happen there. That is where your focus should be. Oscillators are not going to help you figure out what's going to happen here. Moving averages are not going to help you figure out what's happening there, because all that information is looking backward. It's ancient, it's old, it's useless. So you need to look at factors that can help you anticipate what's coming, all right? And then use other pieces of information to confirm that idea. That is what my 6-step process is all about. It's not a specific strategy. There's no statistical advantage to using it, but it gives you perspective and it focuses your attention on information that matters. And the only information that matters is what's going to help us determine what's there, all right? Or at least, I shouldn't say determine, that's not a good word. What's going to help us gauge risk relative to scenarios that can unfold there. That is where your mindset should be, whether you're in Bitcoin, stocks, whatever, all right? So the S&P, the reason why I bring that up with the S&P is because the S&P is at a level of interest. That's a support. This is a support, okay, in the S&P. So we're in a support zone. There are other factors here that I can go over, which, I'm not going to get into all that detail, but this is a support zone, right? So it's certainly a good area to be thinking about short-term longs or swing trades in the S&P itself. Maybe some stocks that are highly correlated to the S&P, but that's it. You have to, if you manage to get any trades that are like 1-to-1 or slightly greater, you take your money quickly, because until these resistances break, until that resistance breaks, we are in a bearish or possibly range-bound environment. All right, so does that all make sense? I know I'm talking a lot today, but anyway, I hope that answers your question. This is important for many, many reasons. All right, Eligius. Okay, gold. Yeah, so I mentioned gold earlier. All right, so I don't have to go over that again. But as we can see, gold is out of control. It's geopolitical. Again, if you want to play that momentum, you want to jump in for a long, understand that once that music stops, you have to be out quickly. Okay, because gold will give it back very quickly. It's very risky. I wouldn't call trades in that, and you're going to have to use smaller time frames. HS, it's good to see you. Winter, good to see you. I like, okay, because this is when, yeah, so HS, that's great. But just like I said, this bearish situation right now, the way it's set up, looks like it can get more bearish. I'm all for buying lows. Believe me, I'd rather buy a low than buy a high, as you all know. But I'm also very particular right now about how to go about doing that, because we have this unusual situation and we have imbalances all over the place. And when you have this, like gold and oil and the dollar doing what they're doing, markets like this, like the S&P, can really get out of hand and do things that are just completely out, not logical at all. So understand that the risk is very high in this environment compared to the environment that we just came from. Okay, Kai. Retail leaves. You can see it in social. Oh, that's interesting. That's interesting, Kai. Yeah, because retail, they're just like, the party's over, and not only that, retail is stuck in a lot of bad positions, and they don't want to hear, they don't want to feel worse about their positions. But yeah, there is certainly a relationship there. Okay, hey Chris, good to see you. Small crowd, second request. Wheat. Okay, wheat. We're wheating. So wheat. Let's take a look. Now, of course, this is going to be one of those. Let me see. Can I get a wheat against USD? Global Prime. I'm just looking at we'll look at a CFD here. That should be it. FXCM has one. Wheat F. Okay. Let's take a look. This is the new altcoin, wheat. I wonder what bread prices are going to do now. I'm paying $100 for a loaf of bread. Is that normal? Okay, so look at this. 1 week. Look at this. Imagine the shorts. Imagine the shorts. All right? No one saw this coming. So again, this wheat situation. This is like AVAX. This is like all those nonsense altcoins, except this is not an altcoin. This is wheat. Now, in a situation like this, again, this is a pure momentum play. If you're into this, like gold, what can you do here? You want to step into it and hope that this momentum continues? That's the only thing I can see. And then you have to be out of this thing as soon as it turns the wrong way. This thing can turn the wrong way at any moment. I mean, on this chart goes back to 2018. Probably if I had a wheat futures chart, I could see where this is relative to a longer time frame. But the point is this. Higher lows, higher highs, enormous higher high. So if you want to be objective about this, what's the thing to do? Well, Kai, you can do this. You can do a retracement, okay, like this. And your first level is going to be here. That's at 863. So that would be basically like your basis, like your base point. But here's the thing with fibs, and I'm not going to get into a fib lesson here. And a lot of my students were not getting this right in the training program, but there are multiple moves that you could measure here. I just measured the broad move. You can also measure this move, which is going to give you less reliable levels, but they're still there. Notice the overlap over here, okay, from the previous. So that's your area that you should be looking at if you're thinking about a long. And that also makes sense in terms of the price structure, because that's a previous resistance, likely to become a new support. Now, again, it's possible that wheat finds support inside. This is a weekly, by the way. Wheat can find support in there somewhere. That's very possible. But here's the thing. If wheat pulls back, it's most likely because the geopolitical pressure is no longer in play. That's what you have to watch out for, okay? When the geopolitical pressure comes off, meaning the Ukraine situation cools off or whatever, if that occurs, these things are going to give it back just as quickly. So you have to be careful with buying into those supports. You have to be very careful because of that situation. Same with gold, okay? Same with oil. The dollar, though, the dollar is the dollar, right? And the dollar is being driven by not only the geopolitical, but it's being driven by interest rates. These things, they should be going lower in a rising rate environment, not higher. So the pressure the bearish pressure when it comes back into this thing will probably be exaggerated. So be very careful at the supports. One way to go about that is consider extreme supports, right? Like, so that means going all the way back to this price here, like we said, 862, or possibly this range low of 740. That would be an extreme move on, pullback on something like that. And usually when you see that type of situation, no one wants to get involved anyway, right? Because it looks like the party's over. But that's where your probability of a bounce is the greatest, all right? Because I would not, we have a nice move here, but I would not anticipate a trend to continue. because of the reasoning behind the move. Again, I could be wrong, and if you want to be objective and forget all that stuff, right, that background context, okay, then look for the midpoint or look for the old resistance, new support. Those would be your points to look for buy signals, at least for swing trades. Does that make sense? I know I may say some conflicting things here, but there are many ways to look at this, and which way you choose is going to depend on your personal risk tolerance and what kind of system you have in place to identify opportunities, right? And what type of opportunities you're interested in. A lot of those play into how you trade the market. People don't realize that. They just react to things. All right, so anyway, good question about wheat. Peter, please, can you look at gold? Yep, okay, what do you think of this rally? All right, so I explained that like 10 times, okay? Thank you for asking. Thomas, SPY. All right, so now, Thomas, SPY is the S&P. So I just went over that S&P chart from Kai's question, so it's going to be the same deal. All right, it's the same chart, it's the same deal. So everything that I said about the S&P applies to the SPY. Again, I wouldn't be opposed to looking for longs. I wouldn't be opposed because we are in a location. It's just we don't have a supportive environment. So if you're going to look for longs, you have to compensate, right? First of all, there's no signal for a long. All we have is a location. What I like about this area is, I mean, again, and this I pointed that out in the S&P as well. It's the same deal. It's not exact, but it's the same deal. It's a support, all right? So it's certainly a place to consider longs, and it's certainly a place where we can get a bounce, but I wouldn't expect a lot from the bounce. Also, I would be very, very tight with the risk as far as I wouldn't take a larger position, none of that stuff, because the chances of this support breaking are greater than usual. All right, so does that make sense? All right, so let me move along here. Okay, Travel said hello. Okay. Oh, Thomas, no problem, no problem. Look, the training program is there. He says he wants to do the training. He's just been busy. I understand. You can do the training whenever you want. Okay, it's there. You take it. You know, you have a 14-day period to basically get all the assignments done, but you have access to the program for a month. So if it takes you longer than 14 days, that's okay. You know, so just something to keep in mind. I'm going to be running a special soon. So if you want to wait maybe like another week, I'm going to be promoting a coupon and you can get a better price. Okay. So just something to keep in mind for people that are interested in the training program. I'm going to change the name of that program. It's more of a mentoring program because that's what it is. I'm giving personalized feedback. You know, a training program implies, oh, I'm going to watch a bunch of videos and I'm going to learn something and maybe take a quiz or two, right? That's a training program. A mentoring program is you're getting personalized feedback from me. And as my students can tell you, I spent a lot of time giving very detailed feedback to each one of their charts and homework assignments that they sent me. And I was able to correct a lot of misconceptions. Here's something you need to understand. And this is a very interesting thing that I learned from the training program myself, from the responses that I got, is you consume information, right? And then you automatically think, oh, I got this, right? And then you hand in an assignment where I asked for apples, but then you hand me oranges. What is this? This is wrong, right? Where did they get this from? So you can't always assume just because you may understand the words or you may understand the concept that you can apply it correctly. That's the value of the training program, because I'm able to see, oh, look, you thought this, but you're applying it incorrectly. Do you realize what a liability that is going forward if you believe you're doing it right and you may spend a year doing it wrong, not understanding why your results are completely random and something's missing? Yeah, you're doing it wrong. Imagine all these people that watch fake guru videos, right? And the fake guru teaches some kind of, I'm going to teach you candlestick, blah, 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 with this moving average, blah, 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 right? Oh, yeah, I get that. That's really cool. Okay. And then you're applying it completely wrong. Not like there's any value to it anyway. But my point is, if there is anything of value anywhere, you can't assume that you're doing it right, right? It's nice to have that feedback. Someone telling you, yes, you are doing it right. And now you can go forward with true confidence, not a false sense of confidence. Does that make sense? So I noticed that was very interesting, and I was able to correct that. Now look, I spent years, just so you know, I spent years doing the wrong things. Years doing the wrong things because I believed garbage that people told me about a particular oscillator, about this and that, and I thought I knew how markets worked. So, you know, I was obviously biased, and it took me a very long time to realize, and I couldn't figure out why I could never really make money. Like, I'd make some money here and there, but I wasn't even aware that my results were random, that basically flipping a coin, I could have gotten the same results. I wasn't aware of that. And that's because what I was using had absolutely no statistical advantage. Okay, there was no secret thing that I was missing. There was no possibility, there was no way it could work because it was random. It would have been nice if someone said to me, what you're using is a waste of time. It's completely random and your results will reflect that. It would have been nice if someone told me that. I would have saved a lot of time and frustration and could have focused on more important information. Okay, that's one of the great values of my program as well, because you're going to be getting it from a source that I've been through all this. All right, I've been in this game more than most of these fake gurus. All right, so I can tell you I'm an expert at everything that doesn't work because I've tried everything and I realized most of this garbage doesn't work. For retail traders, it does not work. You also have to understand what you're competing against. You also have to understand how the microstructure of the market has changed. People go back and they say, well, 10 years ago, 20 years ago, the markets were not, microstructure-wise, were not exactly the same. So inefficiencies that existed back then no longer exist. As a market timer, we need to capitalize on inefficiencies, right? That's why you're looking for a statistical advantage to identify an inefficiency. The market is not getting less efficient. It's getting more efficient. What does that mean? You think that's a good thing? They push that on you. They say, efficient markets are good. They're not good for short-term market timers at all because it means there's no way to beat the market. So markets are getting more and more efficient thanks to algos and all this and all that, and they justify, we're making a stable market. Oh, we're making this, we're making that, right? Nonsense. It's not good for a market timer. You need inefficiencies to capitalize on. And when you find one, you're not supposed, you can't share it because an algo guy will find it, he'll make an automated program, and any capital that was available, any excess capital that was available as a result of that inefficiency will vanish. And there will no longer be an advantage there. That's why any real professional does not share their statistical advantage if they have one. And people ask me, well, your program, or why are you sharing your program? My program does not offer a statistical advantage. It offers a way to extract a perspective and make more rational decisions based on higher quality information that we can find using a chart. And charts in and of themselves provide no advantage. Okay, just so you know, I know I'm ranting right now. I need to get back to your questions, but these are very important concepts. The reason why I'm mentioning this too is because there's something that people don't realize. Things like payment for order flow is I know it's boring, no one cares, right? It doesn't affect me. So what? I pay a couple of pennies higher when I buy a stock. What that means is all the excess capital that was available at one time, because order flow was not routed to market makers, that capital, that excess capital or profit potential is no longer in the market. That's why markets are getting more efficient and why you can't make any money, particularly day trading. Okay? All these day traders, I got my mega mansion and I got my Lamborghini. Right. No, you don't. Okay? Especially now. People that day trade, unless you're a professional, it's even hard for a professional. I have to say, if you're going to day trade, this is definitely a time where you need to know what you're doing, especially because those those wide range markets that we saw that were basically going higher, anyone can make money because you can buy if you're wrong, you just hope, blah, blah, blah. But I'm telling you now, this is even especially a tougher environment for people that have no clue what they're doing. All right. That's why I don't encourage people to day trade in this type of environment. If you're going to do it, swing trade, okay, or invest. Those are much easier, and you will be more protected or have the ability to protect yourself better in this type of environment. All right, let's move on here with your questions. I've been on the SPY chart for like an hour. All right, I'm satisfied with the fact that I was able to not be involved in any FOMO or otherwise Bitcoin recently. I have okay, excellent, Travel. Oh, well, that's something to be happy about. Okay. I feel satisfied. The word may be, okay, satisfied. It's still an emotion, but I'm not going to give you a hard time. Okay, that's cool. Alex, hey, Alex, good to see you. ZN1, yes. So that's an interesting situation. All right, this is the 10-year note. Now you're saying trying to go up. This here is just reactionary nonsense. Don't pay attention to that. It's not trying to go up. They had this upward movement, or for whatever reason. I don't understand why anyone would be buying bonds with the way the dollar is looking, right? That's very unusual. But again, we have a lot of illogical imbalances in this market. So I don't question it. I see it and I'm like, okay, I know that this is most likely nonsense. I'm not going to question it. I don't care why. I don't ask why. All I look for now are, are we breaking resistances? Has the environment changed? And can I anticipate that this leg, this possible reversal leg, has any weight behind it? And no, because again, we're going into a rising rate environment. So why anyone would buy this? There may have been some geopolitical reasons to buy bonds, but look what we have right now. Double top, okay, in a resistance area. So this is going right back to the lows, most likely, especially because that's the type of environment that supports that type of move. So I certainly would not be looking for long bonds. We'd be looking for short bonds, which implies rising rates. All right. Now with the dollar going berserk, that is certainly, like, the dollar is ahead of this thing right now. Usually this thing is the one that keeps the dollar going, right? Because the rising rates, stronger dollar, blah, blah, blah. Anyway, so this is a short. This is an ideal short situation if you short the bonds. You can short TLT. I believe that's the bond ETF. But this general trend in the bonds has not changed. And that resistance is respected for now. Now, if it's possible that this thing starts to put together some kind of bullish structure, if I see that, it's not there yet, okay? You can say, well, yes, it is. Look, there's a higher low and blah, blah, blah. Right, but that higher low doesn't mean anything here, okay? Because this is not based on any kind of rule change, any kind of government change. Powell hasn't said anything about, well, I'm not sure what I'm going to do with interest rates right now. I'm going to raise, but then I'm going to stop. He hasn't said anything like that. So this is just noise, all right? There's nothing behind this. So I'd be expecting the resistances to be respected and supports to break. Does that make sense? Until, like I said, there's a major fundamental change somewhere that supports the move. I don't trade fundamentals, but when it comes to economics, there are certain things that you do need to pay attention to as far as, is that behind the move? Like the Fed stimulating the market, is that something that you should pay attention to? Yes, because when they stop stimulating, we have the situation we have right now. And it's being exaggerated even further by this unexpected geopolitical situation. All right. A few months ago, what was I saying? Anything that unexpected comes out that the market wasn't pricing in is going to make for a tough time. That's what we have. I had no idea it would be Russia and the Ukraine. I had no idea. All I knew was the markets were vulnerable to such a situation because the Fed officially changed their tune in December and said, well, I'm going to raise rates now because I made a mistake, right? That's what he said. Anyway, that's Chairman Powell, my Chairman Powell impression. So I hope that answers your question. That's ZN1. Alex, wheat, corn, other are going to do the same thing as before. Do you expect another? Well, Alex, I don't like to be, I don't like to think in absolutes. All I can anticipate is we're not going into an easy time for stocks, okay? You want to call that, whatever you want to call that, bear market, blah, blah, blah. People like to put names on it. I expect that a positive scenario would be a range-bound market. Supports start to hold. We get some kind of stability of some kind. This Russia situation it's going to at some point cool off, right? I mean, we all hope anyway. It should cool off. And so any type of exaggerated talk you hear about, we're going to go into a multi-year bear market and we're going to have this and we're going to have that, ignore all of it because it puts ideas into your head and basically gives you some sort of false prediction. We don't know. The market will tell us because the market is a discounting mechanism. Just like I spotted the bond market turn back in August. I said, wow, with all this inflationary talk and blah, 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 and we're having inflation and this and that, the bonds certainly aren't reflecting that, right? The bonds had turned bearish and the rates were rising since then. No one was talking about it because the market was partying and blah, blah, blah. No one paid attention. And now that bond situation, you're starting to feel the effects. It takes time. So I bring that up, and we have the bond chart here. I bring that up because when the bonds change their tune, and the Fed will usually follow that, in a couple of months. If the bonds change their structure, and in a couple of months, Powell comes out, it comes out in 3 months and says, well, I think I over raised, so I'm gonna stop raising for a little while. He starts saying something like that, then we can anticipate some kind of support, some kind of consistent support across the markets, like the S&P and NASDAQ, which that would be a good time to be accumulating more stocks, and especially a good time for long swing trades. Okay, so something to keep in mind. Anyway, I hope that answers your question. So, hey, Dave, good to see you. Bitcoin party is over. Yeah, unless it goes the other way. I suspect that it's over, right, until things change. Until I see those structure changes, right? Same goes for there, especially in this environment. Alex, also, gold has been the biggest volume in history since Russia. Could that mean it will break out? So Alex, it's possible, but what concerns me about gold is the catalyst, right? So gold is doing some technically amazing things. Let's just go to the weekly chart on gold. I know I talked about this before, but let's just take a look at this real quick, right? This is pretty amazing on gold. Could this be the breakout for the wave 4? It's possible, but the question is, what's going to keep this going, right? Are we going to continue to have this geopolitical situation? Keep in mind, wave 4 peak, or the wave 3 peak is up here at, what is this, 2075. That's the wave 3 peak. Until we clear that significantly, we're still in a wave 4, right? So this looks amazing. It's going to suck a lot of people in, but it's very vulnerable here, and it's still, in order to say that we're breaking wave 4, we need to clear the top of wave 3 by a significant amount, okay, more than 25% at least. So we're still a ways from that. That's why I'm very suspicious of this gold move. It's just a reaction. Once geopolitical cools off, this thing is going right back to its, range support, or at least the midpoint of the range, and would be a great choice for shorting, in my opinion. So I know that sounds nuts right now. How could you short this? Because it's in a vulnerable position, and the location is ideal for a short. Not a long, but there's no signal for a short. And even if a short signal shows up, you have to be very careful with it and be very tight with it, because it can do this. The real short will come when that geopolitical situation cools off, officially cools off. All right. What are your thoughts on Fed going to walk away from rate hikes? So, all right, so that's an interesting question, Kai. I don't know what the Fed is going to do, but walk away from rate hikes. Here's the thing. That would make sense logically. But the thing is, with oil and gold where they are and wheat where they are, that's inflation, right? I mean, theoretically, that's inflation. It's being driven by, other variables. But with those prices going to ridiculous levels like they are, what's the Fed going to do about that? Are they going to just stand aside? Theoretically, they're supposed to raise rates in this environment. Maybe that's why the bonds rallied. Maybe people figured, the Fed will have to walk away. The Fed can't raise rates in this situation. They'll make things worse. No, I think they have to raise even more now, because they need to control these prices. Otherwise, we're going to be wheeling dollars around in wheelbarrows. Actually, no, the dollar is not being inflationary right now. Right? That's the weird thing, right? The dollar is also going berserk. So I don't know. That's a really big question mark. The dollar is non-inflationary right now. It's going vertical. Well, so it's possible maybe the Fed says, oh, well, the dollar is doing its job for us. We don't have to raise rates. Maybe they'll say something like that. If they do, that will certainly be a pressure off the market. So that's something to look for, right? In any type of testimony or any type of meeting he has coming up or whatever, if the Fed hints toward that, even if we're in the middle of that geopolitical situation, once that cools off, then you're looking at a much more positive market if the Fed walks away from that situation, okay? So certainly something to keep an eye out for. Again, this game begins with the Fed, and I'm glad you brought that up. So thank you for mentioning that. All right, are you still long-term bullish? Well, that's a good question. I guess he's talking about Bitcoin. Am I bullish long-term on Bitcoin? Well, yeah. I mean, I'm not going to be long-term bearish on Bitcoin. Let's take a look at the weekly chart. Okay, this is not exactly a bearish situation. It's just the recent momentum and all that kind of stuff is bearish. But we have supports going all the way back to like 20K. So until we clear that, I mean, look at these lows over here, right? What is this low over here? 28. The low here is 28, 600. That's the low going back to here. So until we start clearing those levels, I'd probably, at that point, I'd be more bearish long term. But right now, I'm not really bearish. These are certainly better places to buy than to sell. I have to say that. But we can revisit those 20K, those high 20Ks or possibly mid 20Ks with all this other stuff going on. So that's what I'd watch out for. But long term, Bitcoin is still generally bullish based on that chart. Does that make sense? So good question. Thomas, on BTC, I've heard a strategy of limit orders at 35, 30, 25 for inventory. Does this make sense from a technical perspective? Okay, well, look, 35 is a support, 30 is a support, 25 is likely a support, and 20, those are all support levels. So from a technical perspective, not only that, they're whole numbers. Yeah, it does make sense. Just the key to something like that, it's really not the levels. Those are all good levels. The key to something like that is sizing properly so that if it goes to 20K, you're not overexposed. Does that make sense? Okay, so good question. Let me move along here. So again, people, by the way, if you're interested in, I see we have some more people here. If you're interested in the perspective that I'm using here to get a lot of this information, that's what I put the training program together for. So I don't have the link. You have to go to markpmarkets.com if you want to see more information about that. But if you're interested, right now I'm letting you know I'm going to do a promotion over the coming week or whatever. If you're interested in the training program, send me a private inbox. Like go to my website, go there, send me a private message, and I can right now I'll send you a coupon through a private message, and you can be like an early, if you're interested, you can get an early start on the coupon. Because again, when I do those coupons, they're for limited seats. There's no way I'm doing 20 students in the next round. There's no way. I can't. It's way too much work. All right, so I'm going to do a lot less students, which means there are going to be a lot less coupons. All right, anyway, let me move along here. This is not a commercial. So let me see, Thomas, okay. What green energy companies are in good technical position? Green energy companies, and that's a good question. If you know what, you should give me some examples of some stocks, because right off the bat, I can't think of a green energy company. A green energy. Let me see. I guess that would be something like Plug Power. Would that be green energy? I don't know. Let me know if I'm wrong about that. But yeah, give me some examples, because I don't want to sit here and talk about a stock for 3 hours if it's not a good example. So give me some examples of green energy. Anyway, this chart, is that a good technical position? Well, it's coming off of its low, but stocks in general right now are going to be having a tough time. Now, energy, with oil doing what it's doing, maybe alternative energy becomes an attractive area again. But keep in mind, this oil situation is temporary. All right, it's not. We can't expect oil to keep going the way it's going. Let's take a look at oil again. This is ridiculous. Oh, look at the pullback today. How interesting. Okay, people that think that this is going to continue at this rate are out of their minds, because there are going to be government reactions to this, right? Governments are going to do stuff about this. No one wants to pay this much money for oil. That's a major resource. So things are going to change, right? And so oil doing this is ridiculous. Great place to be selling oil if you had some or whatever. All right. So anyway, keep that in mind. That's why the green energy, be careful with that nonsense. You're going to have some big mouths coming out. Oh, no, green energy, that's the next big spot because blah, 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 blah. You're going to have, avoid that hype. Avoid that hype. Okay? So, yeah. All right, that's my answer to that. I wouldn't call it that. I mean, Kai, that's an unusual, it's just an unusual situation that no one expected, right? It's not an outlier. An outlier is an extreme situation where, like, for example, the Dow or the S&P, like the S&P has a minus 300 point day, right? That's a ridiculous number for the S&P, right? Right now, what's the S&P minus today? 128 points. That's a big move for the S&P. What are we at? 41.95. Okay, the market's closed. That's a pretty significant move. But imagine if this thing made double the move, or triple the move. That's an outlier. It's extremely unusual. A move like this is pretty unusual. That's a pretty big move. But I wouldn't go, I wouldn't call it an outlier though. All right, it's still probably within at least, 2 standard deviations of an average true range. I don't know what the average true range on this thing is, but it's probably still within 2 standard deviations. Usually what you're talking about is like 5 standard deviations, all right, which is rare, extremely rare. All right, so anyway, I hope that answers your question. Hey, Mark, nice name, easy to remember. From New Zealand, all right, please look at New Zealand dollar, sure. Okay, NZD, I don't get too many Forex pairs here. Mark? So look at this, interesting. See, I'm glad you brought this up. Now, keep in mind, I think it was the Bank of Australia. Someone had their interest rates, or maybe that was the European Central Bank. They have their interest rates this week. I don't think there was any news in that calendar. I can't remember now. That was particular, that can affect New Zealand. But look at that bearish pin bar off of this double top. Now, this is like a question like Dan would ask me, is this a double top? Because that's really far apart. That's what is that? About 2 months apart, 3 months apart. That you can still, I would still consider that a double top. I just won't put as much weight into it, okay? I will certainly consider the reference point. As you can see, I have lines drawn on this chart from previous analysis. This is a resistance level. Clearly, look at this bearish pin bar. This is obviously a reaction to that vertical dollar chart, right? So if you short this thing, that is a short setup. Right? I should send that out in my student chat. This is a short setup if it takes out that pin bar low. So now if the dollar turns back, turns around, because is the dollar going to continue vertical like that? Then this thing is likely going to mess around up here and stay up here. Okay, this is a wide range candle, but this is a nice short setup. So in a situation like this, if you're just going to look from a technical perspective, you're looking at your next support area right around in here. So that's where I'd be measuring potential from if you're interested in the short, okay? Like these areas right here, that's where your price targets would be for shorts. Keep in mind your risk is going to be defined from that. That's a wide range. It's hard to play those. So you have to be prepared for something like that. You can compensate with a smaller position, all right? I know people don't want to hear a smaller position because they want to make billions of dollars. But yeah, that's how you'd handle something like that. I like the setup. Like if the S&P looked like this, I would be shorting this thing all day if the S&P looked like that, okay? Just on that pin bar alone. But anyway, it's a very nice setup, and there's a lot of reasons that back up this. The only concern that I have is the dollar sustaining that move. If the dollar cannot sustain that move, this thing is, what you're going to get in here is you're going to get like a bullish pin bar, an inside bar. You're going to get something like that. That is what you don't want to see, okay? And if it takes out that inside bar, then you should probably take your loss if you're going to short this. That's what I would not want to see, and what I would, justify an early exit on a situation like that. But excellent example of a short setup. Thank you for pointing that out. This is what a short looks like, okay? Whether this works out or not, that's what a short looks like. Not like something pushing a support. You notice this is a pin bar off of a resistance, not a support. Anyway, thanks, Mark. All right, Ying, hey, good to see you. Can you please take a look at PayPal? Sure. So PayPal, I know they've gotten beaten up, right? Yeah, ooh, look at that. So PayPal is getting hammered. Look at this. PayPal is a good company, all right, as we know. So is this a buying opportunity? Well, all right, let's take a look at the weekly chart. Oh, man, look at this. Look at that. Now, here's the thing. So you are at attractive levels for PayPal, no question. This is certainly be inventory levels, but at the moment, there is no reason to buy, okay? Couple of problems here. First of all, right, so structure is showing lower highs and lower lows. That's pretty clear. You have a gap. Obviously, this is some kind of report or some kind of whatever, company report, whatever that is. That's, when it gaps like that and it continues, that's bad. Okay, that's bearish. So we have another lower high in place. A lower low is likely to follow. So what do you do with this? Certainly no swing trades, that's for sure. As far as inventory, if you want to buy some PayPal, okay, but you have to go small because this thing is likely to go lower. How much lower? And how many, where should you be accumulating all of your inventory? Well, that's going to be a function of how much you're looking to invest. right? PayPal right now is 93.61. So you have this absolute low right here. What is that? 82, basically $82, right? This weekly low over here. So $82 is another place where you're probably going to see some buying activity step in. That is an old, by the way, the current price is an old resistance dating back quite some time. So this is good for, like I said, a small accumulation, but you can still touch 82 pretty reasonably, right? So that's why if you were going to invest, let's say your maximum amount, you wanted to invest $10,000, you certainly should not be investing it all here, right? You split that up into maybe 10 $1,000 investments, and you spend the next 10 months buying $1,000 at a time, once per month, right? And then you'll get an average price somewhere in this area. But based on this structure, not only is the structure unsupportive, but we have an environment that's really unsupportive, right? I mean, this thing is probably going to, if the stock market is getting hammered, this thing typically follows the NASDAQ, and we saw what the NASDAQ was doing, right? So it's going to put pressure on these things, even though we can argue, oh, but rising rates should be good for this thing, and blah, 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 blah. No, obviously not, right? I mean, banks are supposed to do better in a rising rate environment. Here's Bank of America. Look at that. Broke that support. Looks like the party's over for Bank of America, right? With the dollar going vertical, maybe it's because the stronger dollar. I don't fully understand the relationship of the banks getting hammered, but I don't question it. They're getting hammered, right? So PayPal, party over. Keep that in mind. These are good. Is Bank of America a bad company? Is Bank of America an altcoin? No. So there are going to be some nice buying opportunities. In fact, I mean, Bank of America, not a bad time to buy, like maybe take a small bite. These are ugly charts, right? And that's a good time to consider. But keep in mind, the structure is not in your favor. Now, wouldn't this be a much better time? Don't you agree that this right now, if you were going to buy anything, would be a better time to buy than up here, right? Of course, after the fact, we can see that. But what I want you to remember, what I want you to keep in mind is when markets do this, okay, when they're optimistic and you turn on your news or you go to your news feed because you're forced to, right? Your platform forces you to look at a news feed, which you really shouldn't be looking at, and all the nonsense that comes out at the stocks, banking stocks, they're going to go up forever. Banking is blah 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 blah. Right? It's all nonsense. Now is the time. And now, if you look at the news, stock market's going to zero. The stock market, rising rates, blah 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 blah. Now is the time to be looking for opportunities. So watch those lows. Just keep in mind, structure is not there with you. So what do? Right? If you're accumulating in this, and the structure eventually maybe over the next 6 months, the structure changes. Perhaps it gets more supportive. Now you continue accumulating, and you're accumulating in a improving environment rather than one that's not improving. Does that make sense? But you'll still have a core position. You'll still have a position that you were buying into while people were getting hammered or getting shaken out of their positions, because that's what's going on right now. All right, people are mindless. You have to understand, the herd is mindless, and they react to what they see, and they're reacting to irrelevant information. So they're acting in an irrational way. As a retail trader, that irrational behavior is the only advantage that we can really capitalize on. In my opinion, it's one of the only advantages left. In a market, which I think will never go away because it's human nature, right? So the only thing as a retail trader that we can capitalize on is human nature, because any other type of statistical advantage or engineering advantage is no longer available. All right, back, when I started out in this game over 20 years ago, I mentioned this story a lot. The people that I worked with, the place where I worked, everyone made money, lots of money. And I was so dumb at the time, I had no idea how I was even making any money. I had no idea. And even years after, I had no idea how I made money or why I was able to make that kind of money at that time. It was because we had a statistical advantage. We had speed. Just like the algos today have that speed, we had that speed. The algos took that game away from us. So the reason why I bring that up is, in order to win in this game, you must have some kind of statistical advantage or some type of particular imbalance that you're capitalizing on. And human nature or irrational behavior, overbought, oversold, right, that type of thing, those are situations that we can still capitalize on. It's just learning how to identify effectively identify those situations, okay? A stochastic oscillator is not going to help you identify such a situation. All right, so anyway, that's my rant about that. I hope I'm making everyone happy with my rants today. Reggie, let's take a look. Oh, Reggie, that's a clean energy. Yes, how can I forget about Reggie? How can I forget? We used to call trades in this thing. All right, so renewable energy, that's the name of the stock. I'm just out of it today. I haven't paid attention to these stocks. Look at this nonsense. Wow. Okay, so this again is a reaction. Look at this. I'm glad you brought this up. This is a reaction to oil. This in fact looks like some kind of buyout situation. Usually when you have this, it looks like the company's being bought out. That's usually when you get something like that. I don't know what the situation is with that, but the point is, you can't play this now. All right. So this is a reaction to oil. Like I said, renewable energy. Well, there was another one. I think it was Sunrun. I think it was. What's the symbol of that? I think it was SUN or Sunrun. I can't remember. Or it was Run. I think it was just Run. Yeah, Sunrun. So look at the structure on these things, right? Because I remember Sunrun and Reggie. We used to send these out for trade of the week. The structure is trying to change. Okay, they're all reacting. But like I said, so technically you have the higher low, right? And you have some potential improvement here. Recent resistances are broken, right? They've tried to break anyway. So you have that technical improvement. But like I said, it's temporary. That's the problem that I had. If there were other variables behind this, like if this was more of a natural market that wasn't being stimulated by the geopolitical situation, then I'd be more confident about something like this. Say, okay, we have a structural change, blah, blah, blah. But I would argue that something like these are temporary, so I would be very careful. In fact, if you want to get involved in them, at least wait for a potential higher low, like a more pronounced one, or possible double bottom. I think that once you see the geopolitical cool off, you're going to see these things give it back. All right? So it's temporary. These stocks typically act more like that anyway. They're like flavor of the week type of stocks to begin with. All right? So don't get caught up in that nonsense. Again, it's funny. Whenever there are hype trends in the market, people ask me questions here. When I get hyped, like, altcoins, and I get a million questions about altcoins. And then electric vehicle stocks. No one asks me about electric vehicle stocks. Notice? No one asks me. But a few months ago, tell me about electric vehicle stocks. And then we have, so if I'm seeing these renewable energy questions, that just tells you something. It means they're being hyped, most likely. All right? Anyway, good question. Intel just got the guy behind Apple. Oh, interesting. That's good to know about Intel. I mean, something like that can affect the perception of Intel. But Intel's a good company to begin with. So, I'll never tell you something bad about Intel. It's just, again, they're going to be affected by the SOX. Maybe that's why Intel is acting relatively stronger compared to the SOX, which is a semiconductor index. All right? But I've been telling people Intel is a good choice for inventory anyway. It's an industry leader. Intel, NVIDIA, Taiwan Semiconductor, any of those. Those are not altcoins for sure. Kai, what is the thing to do with this wheat chart? I would say buy lots of food reserves. Bread, I don't know. Don't buy bread. We're going to be paying $100 a loaf. Okay? Buy cans of tuna fish. I don't know. I don't know what to tell you about that one. But you have to understand, that wheat situation, there's going to be a reaction. The Fed has to do something. They can't just stand aside, right? Because that's basically inflation. So what's the Fed going to do? Dollar is going vertical, so they're like, the dollar is anti-inflationary here, so what do we do? I don't know. This is a tough spot, okay? But if food prices start getting ridiculous, I mean, gas is starting to go. Certain parts of this country, gas is at ridiculous numbers, right? Gas for your car. And it's starting to rise here, which, like I said, is usually a very slow process because we have refineries so close by. But I don't know. Grow a garden, grow tomatoes in your backyard. That'll help maybe. All right, anyway, good question. Chris, Russia is the top 3 wheat exporters in the world. Without that supply, so that makes sense, right? If we're going to have problems with them. But the thing is, though, there'll be a reaction. People don't want this, right? So if that cools off, if that geopolitical situation cools off, wheat will come back to normal, right? So just keep that in mind. Don't overreact to all the hype. Well, you're going to see people. We're going to be. We're not going to be able to afford this, and the price of Cheerios is at $100 a box now. I'm going to buy Cheerios and I'm going to arbitrage it. No. Okay, so don't get caught up in that nonsense. Alex, HTC Corporation started breaking resistances after years. Okay, can you check your monthly time frame? Too bad I can't find a place to buy inventory. Well, all right, Alex, that's a good question you bring up. Okay, HTC, is this the right one? Let me see here. HTC 2498. Let me find it. Let's see. Maybe I have to put the number in. 2498. Is this the right one? Oh, HDC? Maybe you mean that one. Okay, is that Korean? This must be Korean. HDC. So now you're talking about buying inventory and breaking its bearish trend. Now, this is interesting, but I wouldn't really consider this a trend break. All right, here's why. And again, this is a great example of a chart and why, I have the student chat room that I have, because people can bring up things like this all the time. You broke this resistance. Now, we'll take a look at a monthly, but this is a daily. You broke this resistance, which is okay. It's a good start, but you have a long way to go, okay? You have this old support, which is now a resistance. That needs to be cleared. Let's take a look at a monthly. Hopefully I have the right chart here. Let me know if I don't. This is a monthly chart. Okay, let's open this up a bit here. So, no. Look at this trend is even, the monthly trend is bearish. Lower highs likely to make the lower low just because we have a little pop. Keep in mind, look at this going back to the year 2000. Wow. Going back that far, you had a bullish move that occurred for a number of years and then turned more recently, right? So you can have a temporary bullish move that may be good for a year or something, right? Something like that. You see that? But the recent structures were really what you have to pay attention to in terms of momentum. Those bigger picture charts are good for levels possibly and getting a general sense, but they're not good for market timing. All right, when you look, especially a monthly. So you have to pay attention to the recent momentum. This is still bearish. I would not say this is bullish. If you want to accumulate inventory, it's a matter of scheduling and size. You can buy at any price. You want to buy right now, buy it right now. But it's about having an amount that you want to invest and scheduling it out over the next year. And that's really, that's what's going to help you control your risk, is that, the scheduling in the small size. Because if this thing makes the lower low, then you have a choice of you want to wait, maybe that month you don't want to buy some, or maybe you want to buy less, that kind of thing. And it helps you control that exposure. Does that make sense? Okay, so anyway, I hope that answers your question. That's a good question. Hopefully I got the right stock. Kai, good point regarding, in terms of standard deviation. I meant that the hyperbolic reaction to the event, okay, the moment the situation eases or becomes, right, well, that's what you have to be careful of right now. Because again, Kai, right now, everything is being driven by that geopolitical. I mean, you watch overnight, right? S&P is doing ridiculous things. I mean, this S&P chart alone, minus 132 is a big move for the S&P, right? That's a big one-day move. The average range right now for something like the S&P on a day-to-day basis should be about 30 to 40 points. This is like 3 times that. Okay, so that's a very dramatic move in one day. I mean, if I was playing that statistical game, I'd actually be looking for longs in something like this for a short-term bounce, meaning, that would be more of like a day trader type of game. But anyway, so yeah, good observation. Banks might get hammered because global financial market is split up. So that could be, I know they stopped like the banks of Russia doing business. They closed off that SWIFT. They locked them out of the SWIFT thing where they transfer money and all that other kind of stuff. So maybe it's that instability that's causing the banking problems. I don't know. But again, I don't question it. If the chart tells me that that money's coming out of that market, I'm looking at structure, I'm looking at levels, and I'm gauging risk if I'm interested in that market. But typically when it comes to stocks, I just stick to the S&P anyway, right? Because the S&P is basically the gauge anyway, right? So whatever the S&P does, if S&P is good, generally stocks should be doing good. If S&P is bad, stocks should generally be doing bad. Now, if you find stocks that are doing good in this, those are relatively strong stocks. So when the S&P turns around and the S&P changes its tune, those strong stocks should outperform, right? That's the concept of relative strength, not to be confused with the RSI. Flock of geese. Oh, you can hear that? You can hear that, dude? It's funny. Yeah, there's a lot of geese here where I am, because there's a lot of greenery here, and so yeah, they're everywhere. We hear them all the time. So I can't believe you heard that. It's amazing. It's a microphone. Okay, yeah, so that's what you heard. All right, everyone. So man, I've been talking for a long time today. Maybe because okay, no, I'm about on time. All right. So I've answered everyone's questions. Have I? Yeah, so I have another question here. Also, I'm assuming to hedge against Bitcoin. Hedge. All right, so let's go back to Bitcoin. I mean, the thing is, hedge against what though? Like, hedging is the same as being flat, right? I mean, it's the same thing. So if you're long, the idea of a hedge is to protect yourself. If you're long and you don't want to get out of your inventory, and you're like, okay, I don't want to. If this thing goes to 20K or 25K, I don't want to be exposed to that. So you can hedge at any price. The thing is, that hedge can go against you, right? And sometimes it's better off not to have that. Talking about a hedge can be confusing, but to answer your question, putting on a hedge here, it's not the ideal location, because again, the likelihood of a bounce is high here, even though there's a lot of things that don't point toward the bounce. So you have to decide, and you have to decide how you want to manage that hedge, because if Bitcoin bounces here, you want to get out of the hedge, okay? And you're going to take a loss. There's going to be some loss involved in that. If Bitcoin breaks that support, then you're going to be happy you have the hedge on. But hedging is basically like having it's like being flat, but you have to constantly monitor, because that hedge may have to come off. It's very tiring and cumbersome. That's why the best way to hedge honestly is with options, because you don't have to look and worry about them. But if you're going to put on some kind of position, like maybe an Ethereum position against this thing, like long Bitcoin, short Ethereum, that kind of thing, I mean, you might as well buy the cross pair, but or short the cross pair, whatever. You know what I'm talking about. But yeah, that's how I'd answer something like that. You're better off just staying away from hedges all to begin with. Okay, or you can use, Bitcoin has options, right? FTX offers options, Binance offers options. They're basic options. You can't do any complex strategies. I've looked into that with them. But you can buy, if you have to, you can buy a put, right? And that will protect you somewhat. The premiums may be ridiculous, I don't know, and the getting filled, the liquidity may not be that good in this. I've never put on an option position, on Bitcoin, especially using those, we'll call them fake options, because the options on Binance and FTX, those are not like exchange, those are not CME options or CBOE options, those are FTX options, which, they're like basically, hey, let's make up our own option market. So just keep that in mind. But they can help as far as hedging goes if you understand options. I'm not going to get into options right now, but that would be a good idea as far as a hedging instrument. All right, I hope that answers your question, especially for portfolio positions. Right, you could do covered calls, sell calls against your long Bitcoin. That'll help reduce the friction. Todd, HTC Alex asks, is a symbol for 2498. You spoke about something else. Oh, okay, 2498. Did I put the wrong number in there? 2498. Oh, hold on. So let's go to a symbol here, HT 2498. HT. Oh, good. Thank you for bringing that up. There it is. Taiwan Stock Exchange. There it is. All right, HTC. The other one confused me because it was HDC. So I'm like, okay, maybe he just put in the word. Maybe he put in the wrong symbol. No, it's correct. Thank you for clearing that up, Todd. All right, so here's HTC. Now he says, the original question was he wished he'd bought it earlier. It's changed on the monthly. Let's go back to the monthly. I'll cover this thing and we'll wrap this up here. So yeah, that's a structural change from the bearish trend on the monthly. Certainly, I agree with that. Let's go to the weekly. Yeah, so you have the higher low developing. All right, so here's the thing. As far as inventory goes, the inventory game doesn't change. All right, you're buying something with an improving structure. Right? You have this elongated consolidation in the midterm here, going back, a couple of months? All right, this is not a bad time to accumulate. Again, like I said, accumulation is about scheduling and size, not prices. It doesn't really matter the price. And these are certainly better prices than buying the high of that change. So if you're interested in something like HTC, how much is this thing? $60? Are these Taiwan dollars? What is this? Yeah, this is in Taiwan. So if you're interested in something like this, you have your small, you figure out your allocation that you're looking to put into this, whatever, how much money that is, $5,000, $10,000, whatever that is, and you start scheduling out your purchases, whether it's $500 at a time, $1,000 at a time. And when it gets to interesting levels, like perhaps here, or maybe this consolidation breaks lower and you manage to get an opportunity to buy here, that could be 6 months out, right? And in those type of situations, perhaps you want to try to skew a little larger if you're interested, if you really believe in the company and you're getting those really good prices. But these are certainly places to consider starting a position, not necessarily skewing larger right now. Does that make sense? But anyway, thank you for clearing that up, Todd. I certainly like the general structure here, and certainly the right idea. I don't know what they do. Is this the Electronics Corporation? Are they the ones that make like VCRs and stuff? I don't think they make VCRs anymore. I'm old. Anyway, all right, guys. So thank you. These have been great questions. Any other questions? I think I got to everyone's questions. Good observations. Thank you all for joining me and spending this time with me. Again, if you're interested in like my mentoring program, like I said, send me a private message. Okay. Go to my website, markpremarkets.com. Send me a private message on there. Join first. You have to like join it. Whatever. There's like a way you can like join the free thing or whatever. You become like whatever. You register for the site, and you send me a private message on there, and I can send you a coupon. Okay. Again, the seats are going to be limited for the next round. But again, the value, and as students here can tell you, the value is the personalized instruction. You're going to go through 14 days of the videos. The videos are basic, okay? But it's the assignments that you have to do and show that you understand the concepts. Now, if you get through all that stuff, like I said, it may seem intuitive, like, oh yeah, I got that. I know support and resistance, and then you hand me the wrong assignment, right? By the way, I'm in the process of making improvements to the program to make it even a better experience. But my point is this. You get through that program, you get your certificate of completion. I see that you followed instructions all throughout the program. I invite you to the student chat room, okay? And you become an analyst like we have here. The students do the work in the chat room, and they practice the 6 steps. I can see nice charts in there, and people are constantly practicing. Not only that, but people are asking questions in there, and students can help students. That's the whole idea. And there's no extra charge for that chat room. I don't have that set up yet. Like I said before, I will charge people who don't want to contribute. But people who do will pay nothing because they are contributing value. And that's the kind of chat room that I want. I don't want to have a nonsense chat room. People ask me all the time, well, can I get in there? Or can I pay you? Or, I understand what you're doing. I read your ebook. Can I get in there? No, because this room is for people that went through the program, number one. Number two, everyone's on the same page. One of the things that annoy me most about chat rooms is you always get these people in there that have no idea what they're doing. They just walked in and they're talking about the RSI. Okay? You will not find that in my private student chat room. Everyone's on the same page. I want a room of professional, at least professional analysts with at least a professional perspective. Maybe you don't have professional experience, but I want your perspective to be on the same page as mine. Okay, that's the idea, and you will get a lot of benefit from that. It will help you make much more rational and objective decisions, and most importantly, manage risk, because that is the goal here, is managing risk effectively, not making billions of dollars like all the fake gurus promise you. Hopefully everyone here knows that by now. Okay, all right, you guys. Kai's laughing at me, VCRs. Okay, no problem. All right, I'm good. And you too. All right. Cool. All right, guys. So I'm going to wrap this up again. Thank you all for spending time with me here today. Again, I'm going to stream every Monday. I'm going to be improving this as well, the whole streaming experience. So keep an eye out for that. Yeah, I have a lot of work to do. Anyway, you guys. So with all that being said, check out Greenbridge. There's going to be some major changes there as well. and you know that there's going to be some nice benefits there for people that are Greenbridge members now. So I appreciate everyone's patience with that. We'll be having more signals and this and that. Anyway, thank you all for spending time with me, and enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you for watching.